Hey everybody, it's Pete. Good morning and welcome to a new episode of Stocks for Breakfast. Thank you so much for joining me today. Hopefully you had a very nice, safe weekend. Today we're going to talk specifically to swing traders. To differentiate the two between day traders and swing traders, swing traders are somebody who enters a position today with the intention of not getting out the same day. And it could be anywhere from one day to typically it's a 2-week trade for a swing trader. But not necessarily. Something that's interesting is you can have a price target like we did in Roku just recently on Friday. So today's July 13th, the Friday before that, Thursday and Friday, we had a very specific $160 price target, and we hit it in 2 days. We could take a quick look at the chart, and that's it. The trade was over. So whether it's 2 days or 14 days, however long you stay in the trade should be kind of dictated prior to the trade because you need some sort of target. The swing trading concept, the swing trading methodology is really designed to allow yourself to capture some of that overnight movement, because there's been a lot of complaints, and rightly so, that a lot of the movement has been intraday and overnight, and the stock kind of just dries up and does nothing. So a lot of active traders are starting to look to hold those overnight so they can capture some of them. Obviously, the downside to overnights is you're also exposed to overnight exposure against you. However, as we discussed in a recent video, a lot of that indecisive price action, I'm trying to think of the right word for it, a lot of you feel like, here's the best way to put it, a lot of you feel, based on the feedback I'm getting in emails, is that as soon as you put a trade on, it moves against you, and the swing trades feel like they're bigger losses immediately. And that really comes down to one thing and one thing only. It really comes down to you need to learn how to time your entries better. It's one thing to understand order flow. It's another thing to completely understand the tape. And I get some questions recently, and especially last week, from new members into the bootcamp, which, by the way, if you'd like to find out more about the bootcamp and see how other traders are doing, definitely click down and see how other members are doing. So anyway, tape reading is different from chart reading because tape reading builds an argument for the probability of profit. So it's one thing to say, I want to be a buyer now. I like this stock. It's going up. I definitely want to be a buyer now, versus I want to be a buyer, and right now is the time to do it. There's a giant difference between the two. And that's the difference between the comment that we get a lot, which is I was right on the trade, but I didn't make any money on the trade. As soon as I got in, it pulled against me. I did what I was supposed to do. I was stop loss. I took a stop loss. I put a stop loss in, took a loss, and then the stock did exactly what I thought it should do. So two things here. Number one is, if you're a swing trader and you're watching the daily charts, there's really nothing wrong with that, but you're going to be exposed very similar to a day trader, where there's going to be a lot more back and forth price action, and one candlestick can shake you out of your shoes and get you out of the trade. Number two is you should probably be really, really thinking hard about whether or not it should be the daily charts you're watching. And I'm gonna really dramatically bring this home in a second. Actually, I'm gonna go to the charts, and then I'm gonna come back. We're gonna take a look at that to show you what I mean. We're going to use Apple as an example. So clearly, it's pretty easy to see Apple is in a nice uptrend. It's been at or near all-time highs recently. So this really here, this type of price action here, is what gets most inexperienced traders or traders who don't understand tape reading to put on a trade, get stopped out, only to watch the stock, $50 higher 2 weeks later. And it really comes down to this. They're getting involved here because the stock is moving. They're running a scanner. They see the stock is up. It's up 1 day, 2 days, 3 days. Like, oh my gosh, now I really have to get involved because the stock is moving. Fear of missing out kicks in. You buy 4 days after the move happened, and then the next 2 days you get stopped out, and the stock does exactly what you thought it should do. So first of all, you should never be buying. Actually, let me take that back. Never is a strong word. You should be paying attention to when you're buying and asking yourself the question, if I buy today, what are the odds of following through for me to make a profitable swing trade? So just, again, that's really the foundation question that you need to ask. If I buy today, if I buy right now, what are the odds of me making money over the next several days as a swing trader? And especially in regards to your stop loss. So you can see here, looking at this chart, that it can be, you can have a lot of data as a swing trader. Say, okay, I got to go to my real job. I got to go. I can't watch the market all day. And you end up making trading decisions here when you should just be using this chart for timing. What you should really be doing as a swing trader is looking at a chart like this, where everything just magically looks 100 times clearer in the same stock, where there's literally no reason to get out of the stock because it just keeps making higher lows and even in some cases higher highs, which is what we call well bid in the community. So the chart that you're looking at, it's very important to go higher time frame first, lower time frame to time your entry, and that has to do with where you're buying it in the most recent momentum, and then you go back to the higher time frame to manage the position. So obviously looking at this chart now, it's just ridiculously easy to pay attention to what should be doing. So we'll go to something else like the stock that we've been making quite a bit of money in recently, which is DocuSign, and you can see that there's some indecision here, but the trend of price action, the trend of the order flow is clearly higher. But again, you take a move like this, you're like, oh my gosh, the stock is rallying and I really need, because it's just such an obvious move, right? So you get involved up here, 1, 2, 3, the 4th day after the rally, and you're left holding the bag because you're buying too late. You're not understanding how to read the tape. You're not understanding good price action. You're not understanding the best entries in the direction of this move. So clearly you can see what's going on here right now. But then if you go out to the weekly chart and you're like, oh my gosh, what in the world was that? How could I ever get shaken out of this stock when it's just so obvious? So the point that I want to make here is that's really the difference between understanding chart reading or basic technical analysis, which is what most people who have a trading account do, from taking the next step and fully understanding we didn't open a trading account to become the greatest chart reader in the world. We opened a trading account to make money. We opened a trading account to see our trading account start to grow and grow steadily and hopefully at some point grow exponentially. And that's the difference between setting up trades and building arguments for a trade and learning how to read the tape to better time your entries into those swing trades than just buying because the stock is moving. And I bring this up because we also have a lot of lower price stocks that people are actively trading. And quite frankly, there's nothing wrong with trading them, assuming you could make fast decisions like NEO, INO, and NKLA, a few of those stocks. It's not as cheap, but nothing wrong with trading them as long as you could make fast decisions in the context of what I just spoke about. We have a lot of people, even a couple of months ago, maybe about a month ago, when the airline stocks took off and a few other stocks where they had 100% rallies in 2 or 3 days. And I'm getting all these questions about how much should I buy now? I really like the stock. It's going to the moon. And the answer, the honest answer coming back was, what do you think of the odds of those stocks going higher over the next short period of time if you buy it after it rallies 100%? The odds are kind of small. Sure, there's some stories of stocks, but you're not trading some stories. You're trading what normally happens. So again, if you really think about it, if you're sitting at your computer right now and you feel like every time I put on a swing trade, as soon as I put this thing on, it's moving against me. As soon as I put it on, you're sweating the trade out. That's the difference between chart reading and tape reading. If you really want to learn tape reading, obviously, please subscribe to this channel. You get a lot more of these types of videos. But if you really want to take it to the next level, you could join the boot camp, or you could learn about our tape reading room, where we do. It's more for active trading, day trading specifically. But the boot camp actually goes over all of this, and we talk about trades in all of the different time frames. So I hope that helped make the difference, because you can only qualify yourself. You have to identify yourself. Yeah, that sounds like me. Every time I put a trade on it, it feels like it's going against me right away. That's kind of what we talked about. So understanding how to time those entries, understanding the momentum, understanding the most recent price action. There's a difference between pick a side and pick a spot. You got to put those two things together to really learn how to make some money. So have a great day, everybody. If you have any feedback or comments about this video, definitely leave a question in the comment section. Certainly subscribe to the channel, excuse me. And if you want to find out more about how other traders are doing in the boot camp, click the link below in the description too. Thank you so much. Have a great day.